Today, we're diving into something every single digital entrepreneur absolutely needs, but let's be honest, almost nobody actually wants to deal with. Yep, we're talking about taxes. I know, just hearing the word probably makes you want to close the tab, but stick with me here, because we are going through a literal survival playbook for navigating online business taxes together. We're drawing all of this directly from Teresa Marie's fantastic guide to the do's and don'ts of online income, and we're going to break it down so it actually makes sense. Okay, let's dive into this. Did you make any money online this year? Think back over the last few months. Maybe you finally saw that little notification pop up for your very first affiliate commission. Or perhaps someone actually bought a digital product you created. Hitting that first online dollar is a huge, incredibly exciting milestone. It completely validates all your late nights and your hustle. It's proof that you can actually do this. But, there's a flip side to that coin that kind of sneaks up on a lot of us. Because while starting an online business is thrilling, ignoring your taxes could literally cost you everything. That massive excitement you felt from making those first few sales, it can so quickly turn into an absolute nightmare of stress, massive IRS penalties, and even legal trouble if you aren't prepared. And the crazy thing is, most beginners just honestly don't know the rules. That's exactly why understanding this stuff isn't just some helpful little tip, it's an essential survival manual to protect the business you're working so hard to build. All right, Section 1, the self-employment reality check. Let's establish some basic ground rules for making money online. So if you make money online, even as a complete beginner with just a tiny side hustle, you are typically considered self-employed in the eyes of the government. But what does that actually mean for your day-to-day life? Well, it means there's no HR department doing the math for you anymore. Taxes aren't automatically taken out of your paycheck like they are at a traditional 9-to-5. When you get paid online, you get the full amount. But, and this is a big but, that full amount isn't all yours to keep. You are solely responsible for tracking it, reporting it, and paying the IRS directly. You're the CEO, right? Which means you're also the entire accounting department. And here's where so many people stumble right out of the gate. There's this massive, persistent myth out there that small amounts don't count. I'm here to tell you that is absolutely false. You have to report all of your income. Whether it's $20 from affiliate commissions, a couple of digital product sales, random freelance payments, or ad revenue trickling in from YouTube or a blog, it all counts. And here is the crucial detail that catches so many people off guard. Even if you never receive an official tax form in the mail, like a 1099, you're still legally required to report every single cent. The responsibility is 100% on you. Moving on to Section 2, Rules for Online Taxes. Time to look at the strategic rules that will protect your hard-earned cash. Now, what's really interesting about this slide is the stark contrast between mixing your money and keeping it separate. When you first start out, it's so easy to just let your business income flow right into your personal checking account. But mixing your personal and business money creates absolute chaos. Try looking back at a bank statement from 8 months ago and figuring out if that $30 charge was a business software subscription or just takeout food. It's a massive red flag if you're ever audited. On the flip side, opening a separate, dedicated business bank account gives you crystal clean records. It makes your bookkeeping dramatically easier and gives you genuine peace of mind during tax season. It really is a non-negotiable first step. Okay, now let's talk about the fun part. Yes, there actually is a fun part to taxes. We're talking about hidden money savers, otherwise known as your deductible expenses. I was amazed when I first realized that tracking your expenses actually saves you money. Things like your website hosting, software subscriptions, marketing, office supplies, even partial use of your home internet and business-related courses. These aren't just frustrating costs of doing business. They legally deduct from your taxable income. That means the government lowers the amount of money they tax you on, which means you pay less in taxes overall. So track every single dollar you spend. Now, I want you to look closely at this number, $1,000. This is a huge milestone to be aware of. If you expect to owe more than $1,000 in taxes for the year based on your online income, the IRS usually requires you to follow a completely different payment strategy. You can't just cross your fingers and wait until tax season in April anymore. And this brilliantly illustrates what that new strategy looks like: quarterly estimated payments. Taxes are not just a once-a-year event when you're self-employed. Instead of one big, painful lump sum, you're expected to make smaller estimated payments throughout the year. The deadlines usually fall in April, June, September, and January of the following year. It kind of feels like you're subscribing to the government, honestly. But missing these deadlines can trigger really annoying penalties. If you're hitting that $1,000 threshold, you need to put these months on your calendar right away. It's also super important to understand that your specific tax benefits and responsibilities depend heavily on your business structure. If you just start selling things online today, you automatically default to being a sole proprietor. That's where most beginners start, and it's perfectly fine. But as your income grows, you might transition to an LLC or limited liability company to protect your personal assets. And eventually, you might even look into an S-Corp, which is an advanced strategy that can save high earners a ton of money. You don't need to overcomplicate it today. Just be aware of what bucket you fall into right now. All right, Section 3, costly mistakes to avoid. Let's shift gears from foundational rules to the urgent beginner errors we absolutely need to sidestep. You definitely want to live in the do's column here. You want the deep, calming relief of keeping accurate records throughout the year, whether you use simple spreadsheets or dedicated software like QuickBooks. You absolutely must keep your receipts. And yes, digital copies or photos on your phone are perfectly fine, and you must file on time. Contrast that calm approach with the sheer panic and audit risk of the don'ts. Please do not ignore your taxes hoping they'll just magically go away. Do not guess your numbers. Estimating without records almost guarantees you're going to either overpay the government or underpay and get hit with fines. And whatever you do, do not wait until the last minute. That turns what should be an afternoon of simple paperwork into a terrifying, overwhelming nightmare. So how do you practically prepare to avoid that nightmare? Here is the absolute golden rule of online business survival. You need to automatically set aside 20 to 30% of your income for taxes. Every single time you get paid, slice off that percentage and hide it in a separate savings account. Make this a non-negotiable habit from day one, literally from the very first dollar you earn. If you do this, you will never be caught off guard or forced to scramble for cash when the tax bill finally arrives. So the crucial point is staying vigilant against a few other common traps that totally blindside new entrepreneurs. Forgetting state taxes is a massive one. Depending on where you live, you might owe state income tax, and if you sell physical products, you might owe sales tax too. Many people also completely mess up by not tracking income from multiple platforms, like if you sell on Etsy but also take direct clients. Forgetting to report cash or casual PayPal transactions, that is a fast track to an audit. And remember those deductions we talked about? Not claiming them is literally throwing your own hard-earned money back at the government. Finally, refusing to consult a tax professional or CPA as your business grows just to save a few bucks can end up costing you tens of thousands in missed savings. Let's move to Section 4, your tax action plan, and see how this builds into our final empowering phase where we actually take action. Look, you really don't need to be overwhelmed by all this anymore. We've gone through the rules, and now it's just about execution. Just follow this simple 3-step sequence today to get ahead of the game. Step 1, create a simple income and expense tracker right now. A basic free spreadsheet works perfectly. Step 2, open that separate business checking account to keep your finances completely clean. And step 3, commit right now to setting aside 20 to 30% of every single payment you receive. Doing these 3 things instantly transforms you from an overwhelmed beginner into a savvy, organized business owner who's fully in control. I love this quote from Teresa Marie's guide because it perfectly captures the ultimate payoff for organizing your finances. The more you understand taxes, the more money you keep. It's truly that simple. In the world of online business, tax knowledge isn't just theoretical power, it is literal profit. It's profit retained in your bank account instead of being mindlessly handed over to the government in the form of completely avoidable penalties. Which leaves us with one final, incredibly important question to ask yourself as we wrap up. Are you going to keep your hard-earned money, or are you going to give it away in penalties? The choice is entirely up to you and how you decide to act today. Start tracking your income and expenses right away, seek out helpful tools like a tax checklist to stay organized, and take total control of your online business journey. Thanks so much for joining me on this explainer, and I will see you on the next one.